recognize the face, but you might not gonna recognize the black hair. That's it. Yeah. Okay. Check this.
Put it in time.
1 minute. We run these from 8 till 5:30.
Non-stop, eh? Half an hour. Yeah, sure.
Good morning. The next presentation we have with MicroCap is EnWave, Brent Charlton.
Thank you. Thanks everybody for joining us this morning. I know it's presentation after presentation after presentation. It's hard to get yourself organized in these different rooms. Today we're going to talk about EnWave Corporation. This is a business that is commercializing a patented dehydration technology that marries vacuum and microwave to create a controllable, low temperature, efficient way of drying primarily food materials. But we do also have commercial partners in the cannabis space in legal areas globally. And in the biopharmaceutical space, R&D projects ongoing with Merck Pharmaceutical, Gale Alpha, one of the primary freeze dryer builders in Europe. And more recently, we announced a master service agreement with a company called Biotechnique. Standard disclaimer, I'll likely be including some forward-looking statements on the future growth of the business. In terms of our capital structure, we have just over 110 million common shares outstanding. Balance sheet per the last quarter was about 4 million in cash. Small amount of debt in the term of a $500,000 term loan tied to a credit facility, which we secured in late 2024 through Desjardins, a Tier 1 bank. The purpose of that credit facility is to allow us flexibility in building some of our large-scale machines on spec prior to receiving purchase order to condense the time to deploy these machines, which are ultimately going to produce royalties for our business. And that is what is unique about EnWave is our business model. We're not your standard OEM selling a manufacturing piece of equipment to a food company. We have an ongoing relationship with them, providing them with innovation in new product applications and processes. And in return, we get paid a percentage of their gross revenue based on those product sales into market, typically between 2 and 5%, or we're charging a weight-based royalty per pound or per kilogram ongoing. So the purpose of our mission at EnWave is to build up the biggest diversified portfolio of royalties that we can, and ultimately wake up in the morning in future years, fog the mirror, and get paid for doing just that. So in regards to the companies that have adopted this patented vacuum microwave technology and are now using it to produce commercial food products into market, they're shown on our, I'll call it our trophy slide wall here. Many of those brands you'll know, Dole, Calbee, one of the largest snacking companies out of Japan. We have an ongoing project with the U.S. Armed Forces for the improvement of certain military ration inclusions, as well as in the pet food area with Purdue Farms, a massive chicken purveyor, and several of the top global dairy companies in Arla Foods and Royal Friesland Campina. One company which I've been asked about frequently over the past 48 hours is Branch Out Foods. And Branch Out Foods is publicly traded on the NASDAQ. They've been one of our fastest growing royalty partners in that they've bought multiple large-scale production units to be used down in South America and Peru. and have entered the US market with a branded snack play, but also are doing massive production on a co-manufacturer base, selling ingredients to larger CPGs for inclusion in different applications. So in regards to the investment highlights of our business, we have built a very large moat around this particular value proposition that is REV technology. We have 18 patent families, which we filed for those individual apparatus design patents, as well as process patents in multiple international jurisdictions, basically every major jurisdiction that we're doing business in, to ensure that no other companies can develop similar styles of vacuum microwave equipment. Let me state this. Vacuum microwave is a very difficult technology to perfect. If you don't optimize the power density under certain levels of vacuum, what you get is essentially, in layman's terms, lightning within the vacuum chamber, burning the product, burning certain components of the machinery, and making it not feasible, obviously, at commercial scale. And that is the magic, I'll say, that EnWave's engineers and food scientists have created, is that we have figured it out. And we have now operating history since 2013. That was our first large-scale line deployed. And now we're starting to see a bit of a snowball effect with different brands buying repeat machine orders, and also new brands coming to play because they see successful products in the market. In terms of the TAM, there's a slide forthcoming on this. Everyone needs to have a TAM slide, but where we compare ourselves to competitively would be the incumbent technology of freeze drying. Now, freeze drying has been around for multiple decades, but it's a very cumbersome process. It's very expensive. It's batch in nature, and there really is no flexibility in the use of freeze drying in terms of final moisture content of specific applications. You have to go down to 1 or 2% moisture without being able to stop at, say, 10 or 12% moisture because of the lack of homogeneity in the drying process. That is another value piece to the REV technology, which is our branded vacuum microwave technology, is that we can stop at any final moisture content that we please, so long as it's below a water activity that creates shelf stability. We don't require any funding. We've got again, a healthy balance sheet. We have the credit facility to use to build machines on spec. We have no plans of raising capital at this time. And the pipeline for new sales of these machines is quite robust. We had an announcement earlier this week with another repeat purchase order, and we're expecting additional purchase orders to be released in the coming weeks. So why would food manufacturers even consider vacuum microwave when you've got air drying and you've got freeze drying, spray drying, different methods to dry products that have been around for a long period of time? Well, going back to the previous slide, we obviously have that flexibility and final moisture content, but more importantly, the speed of our drying at low temperatures. So typical processing times using vacuum microwave are 1 to 2 hours versus freeze drying, which can be anywhere between 12 to 24 hours, depending on the product and the cut size of the product. And even air drying takes 8 hours to produce similar throughput in product. But with air drying, you're blowing hot air over the product, degrading the nutrient retention, and ultimately not being able to produce a high value end application. It's more commoditized. Here we have a couple pictures of the actual machinery. The picture on the bottom, I guess, would be your right, is an installation in Vancouver. We have a fully fledged toll manufacturing facility that we use to allow certain companies to do line trials, to get product to market, and to de-risk the CapEx outflow to acquire their own internal manufacturer. It also is the penultimate showroom. So when folks come to do product and process development at our innovation center in Vancouver, they can walk across the parking lot and see a large machine in action, again, further de-risking the potential adoption of this new innovative technology. So here are a few more of the key value propositions that potential adoptees of this technology consider before buying the machinery and signing a long-term license, paying us royalties based on their future commercial success. Depending on their interest, we'll focus more on different areas where REV technology wins. But of note, this technology has and continues to be used to turn trash to treasure, taking B and C grade produce and turning into value-added ingredients or snacks in market. Conserves water, as there is no water usage other than cooling the magnetrons within the machinery. Minimal CO2 emissions, and incredibly energy efficient. That's another key point when comparing it to freeze dry. It consumes about 70% of the energy needed to produce the same amount of product. So driving down the OpEx for using this technology versus freeze drying. The economics are simply put better. So I won't go through each particular quadrant of this chart, but again, summarizing some of the critical differences between freeze drying, air drying, the two primary incumbents that have been used for many years, and our vacuum microwave rev dried product. So where we've been most successful in commercializing this technology is indicated in the small blue circles on the left of the screen. As you see, for fruit and vegetables, we signed 18 commercial royalty-bearing licenses, subsequently 15 in dairy, 5 in the meat and seafood vertical, 3 for instant meals, ramen, and different baked products. Like I mentioned, the U.S. Army previously, they're actually incorporating a dried chewy cheesecake into their ration program in the latter half of this calendar year, which we're hoping obviously snowballs into additional large-scale purchase orders and additional volume needed. And then lastly, in the pet food, our sales team is actually going to be at the Pet Food Forum trade show coming up next week, really pushing hard to gain new projects in that area. And then cannabis was a windfall for us in 2018, 2019 when it went legal in Canada. We took advantage of that, sold a bunch of machines, but as anyone who's followed the space, it's been an absolute cluster. And we ended up buying actually majority of those machines back from those cannabis companies because they weren't operating them for pennies on the dollar, and then flipped them and sold them to food manufacturers who are now actually using the machines and generating royalties for our business. But what we do know is that the technology does offer a unique proposition for cannabis in that it dries again in less than an hour and keeps the terpenes at a level that's appropriate for premium smokable product. Currently, Organogram in Canada and an unnamed party in the US are using larger scale equipment for cannabis drying, but we haven't been really active in that area, but business development wise. So we talked about the total addressable market. I think 2 critical metrics to look at would be the value of new freeze-dried equipment that's sold per annum. That was tabbed at $4.3 billion in 2023 and expected to grow at a 7% CAGR. That's not including any of the air dryers that are sold. It's very difficult to aggregate that information globally. And then in terms of royalty generation, we only looked at freeze-dried products sold in market. So as you see the bottom left of this particular chart here, it's $36 billion in value in 2022 and expected to grow at an 8% CAGR to 2030. We also included the cannabis sector, but really where we're focused right now, again, is in the food market because that's where we're seeing the most commercial success. So 3 ways to make money. Selling the machines. We don't give them away for free. We don't lease them. They have to put up capital to get in the game. So typically we structure a purchase order with a 40% down payment, 20% 3 months into the build, and then an additional 20% before we deploy and the final 20% after commissioning. That way we don't require a huge sum of working capital to get these machines out into the field. The value of these machines, you can see that's in Canadian dollars. Up here, it's about $300,000 for a smallest scale batch unit, which is used for early stage product development and market trialing. And then the continuous lines range between 1.75 to 2.5 million per. Margin on those sales is typically around 30% gross margin. And right now, as you can see, our revenue mix, about 76% of that last year was machine sales as our royalty revenues continue to grow. And that's the second part of generating revenue for our business is, and the most important in our mind, is the royalty streams. And what we're seeing now versus what maybe we saw 3 years ago is an acceleration in royalty growth coming from successful products in market, which has led to repeat purchase orders on additional machinery. And it's starting to grow faster than it certainly was again 3 years ago. And also the royalty partnerships that we've forged more recently are with blue chip companies versus small to medium enterprises who are more had a higher penchant for risk. And now because again those products are proven in market, you see very large blue chips engaged with us now in our sales pipeline. And then lastly, incremental up to 2 million in revenue comes from our co-manufacturing facility. Again, the primary purpose of establishing that was a showroom to show the technology and also allow for companies to take product to market before investing the capital in the machinery themselves. So why EnWave? Well, I talked about the nuance of perfecting vacuum microwave technology. There is not another company that we know of globally that has successfully scaled up a reliable vacuum microwave technology. If PepsiCo could buy a vacuum microwave machine and not pay a royalty, you bet they're going to buy the one that's not paying the royalty. And so PepsiCo and others, Dole, actually have investigated certain companies that claimed that they had vacuum microwave technology and were aiming to scale it up. They went and kicked the tires and ultimately came back and decided to work with EnWave because of the truth in the matter. We are the only purveyor of commercial scale vacuum microwave technology globally. And because of the value proposition that we talked about earlier, justifies the royalty being paid, given that there's heightened margin for them to reap. So in regards to the sales process itself, it typically will start with a pitch or inbound inquiry where we will do product development samples and run through a high level economic model to show them that this is a viable business opportunity for them. Then they'll either rent machinery, that one of our smaller 10 kilowatt units, and pay us for that for a period of 3 to 6 months, sometimes a little longer, before making a decision to negotiate a royalty-bearing commercial license. Those royalty-bearing commercial licenses have a term of the life of our intellectual property portfolio. So every license that we sign, the term is when the last patent in EnWave's portfolio expires, the royalties turn off. And so the last material patents that we filed for were in 2023, again, elongating that term for another 20 years, going out to 2043. And we're continuing to innovate. There's plans for applications for additional patents this year. So the idea here is that these royalties, as they grow, hopefully will be perpetual. That's the idea, continue to innovate and diversify the IP. And then after that, of course, support comes. So it's not just we sell them the machine and say, good luck, slap them on the back. We're always monitoring the use of the machinery remotely. And that's part of an audit process to make sure the royalties being paid are accurate. But also if a new process or a new product is developed, we want to enable these companies to exploit that and to drive, again, royalty growth for EnWave. So this is what our machines actually look like. Again, our small batch unit on the left, and then subsequent continuous machines in the middle and on the right. The footprint of these machines are less than what industrial sized batch freeze dryers are. So typically you can put 2 machines on a footprint that would take 1 large batch freeze dryer. It's obviously going to drive costs down and increase efficiencies in the operating plants. So as we continue to grow, we feel that this business model is naturally scalable in that as the revenue mix starts to transition more to royalties versus a higher level of machine sales, we are going to increase margin, and every machine that we deploy is basically a royalty check that we're going to collect quarterly. The royalties that thus far from our royalty partners have been stable and growing. So if you look at, and we will in a minute, the growth of our royalties, they've been sticky along the way. They haven't sort of ebbed and flowed. It's been a consistent growth on a quarter by quarter basis and fiscal year to fiscal year. And of course, as that happens, we hope to be able to cover the expenses of our business, which is about $4.5 million right now for all of our operating expenses. Right, our royalties last year, fiscal year, were $2 million. We're forecasting closer to $3 million for fiscal 2025. Our year end is September 30th. And then thereafter into fiscal 2026, based on our pipeline, we hope to continue that level of growth, getting closer to that $4.5 million mark, where all incremental margin from future machine sales plus incremental royalties will then fall to the bottom line, which then will allow us to buy back stock depending on the value of our stock in the market and or establish a dividend paying program. So where have we put our investments in recently? Sales and marketing. We went and headhunted a very talented new VP of sales last summer. And then she subsequently hired a new business development manager, again, very experienced, that's just started up in Europe to represent our technology. And we've also hired 3 other internal folks to help with the effort of attending pretty much every trade show imaginable globally to make sure that people know about this technology and what it can do for their respective businesses. And from that, again, we've seen a growth in our pipeline and ultimately a level of confidence within our business that we're going to have more machine sales and more consistent machine sales versus those lumpy quarters because of the impact of each individual transaction to have more smooth earnings as we move forward. A snapshot of where we play. So we are truly a global technology company in that we've deployed machinery into 24 countries. And as I said, north of 50 licensed partners currently working on the commercialization of different vacuum microwave applications. So some of the recent wins we've had earlier this week, we sold the 4th large-scale machine to a company called MicroDried based out of Idaho. They have an established business selling fruit and vegetable ingredients, the biggest branded companies in the US and beyond. So you buy, Blue Moon beer and it's got that orange flavor. Well, that flavoring is coming from vacuum microwave dried orange powder that they sell and include in that particular ingredient deck. So they're growing fast, and there's anticipation that they will hopefully be buying another machine forthcoming by July, and then a couple other opportunities in South and Central America coming up. I mentioned the master service agreement with Biotechnique. That's again for vaccination drying. They have a client which they're working with right now and potentially could acquire a GMP certified vacuum microwave dryer, not through us, but if you go back into our filings, we signed a joint partnership agreement with a company called GEA Lyophil, which is the largest manufacturer of pharmaceutical grade freeze dryers. They are representing our technology in this particular vertical, and we have an arrangement where when they sell their machines and our royalties are applied, that we share in that success or lack thereof. And so far, there hasn't been a huge amount of success or traction in that particular area. And then a few other 10 kilowatt small units that were recently sold, Peru, Japan, and Brazil. So we're actively deploying this technology globally. So yeah, I love this slide because it illustrates where we're going as a business, and you can see the growth that we've seen fiscal year after fiscal year in terms of our third-party royalty generation. Again, we expect further growth in fiscal 2025 and beyond. And the leading indicator for royalty growth is the number, or we call it kilowatt capacity, of these machines that we've commissioned, deployed to different royalty partners. And so for fiscal 25, we should see another material jump up in the kilowatt capacity installed, which then leads you to believe that there should be more royalties being generated in the latter half of this year and into next, just based on that incremental growth. Right now, we have 22 large-scale machines deployed, okay, and that's going to generate somewhere in the range of $2.5 million to $3 million in royalties. I mentioned we needed to get to 4.5 to cover our expenses. So back of the napkin math, based on an average royalty generation per large-scale machine, if we can get to 40 large-scale machines, we should be able to surpass that amount. And so I'd say the past 3 years, on average, we sold 4 large-scale machines. This year is a bit more aggressive. We think we can surpass that, and into 2026, again, get more towards the 6 to 10 machines per year and getting to that 40 machines deployed as fast as we can. So quickly on our board of directors, as we have 5 minutes, I want to open up for Q&A. Capital markets experience with John Budreski. Finance experience with Louise Lalonde, ex-PwC partner. She's fantastic. Patrick Turpin, entrepreneurial and packaged food expertise. He also was an executive at Costco for many years, so he really knows the retail space and perhaps what our royalty partners are thinking. And then Pablo Cusati, who's a seasoned COO who's worked for multiple large food manufacturers, who also gives out that perspective when we're talking to plant managers. What do we need to say? What information do we need to present to close more deals and sell more vacuum microwave equipment? And then I'm the token CEO board seat. Management, Dylan, my CFO, is here in the back of the room as well. Dan Dunnage is new VP of sales that we hired, who was previously managing business worth over $1 billion for Gordon Food Service in Canada. And then our two geniuses, Mehmet Suku, our chief engineer, and Dr. John Zank, chief scientific officer. They both have the golden handcuffs on them with big option packages, so they're not going anywhere. They're staying with EnWave for their entire life, if I can have anything to do with it. So I'll stop now and ask if anyone has any questions.
As the client mix continues to skew towards larger chip companies.
Yeah.
Curious to get your thoughts on sort of capacity from a machine sales perspective to meet that.
Great question. So our current manufacturing capacity for large scale machines is 10 per year being built. If it surpassed 10, we already have relationships that are being developed in Mexico and Turkey. So dependent on where those machines are purchased from, we can leverage some of the outsourced manufacturer. So no worries about that. And also, if one of these large blue chips says, well, we don't want to manufacture, we just want the product, no problem. Let me introduce you to our royalty partner here who focuses purely on co-manufacture. Fantastic. Then that pushes a company like Microdried Milne to buy another machine to support a Kraft Heinz or some company like that. That's how we foresee the growth. Yes.
Market's missing stuff. I mean, you guys have strong fundamentals, good growth story, but the price has been pretty stable. I guess it's a good word to put it over the last year. Like, why? What do you think we're missing here?
It's a show me state right now, putting together more than 2 quarters of strong performance. And last year, which wasn't included in this particular slide deck, we had an ongoing legal dispute with a former executive in our business who we accused of stealing confidential information. We successfully sued that person. We settled. We got everything we want, including IP transfer, and put that to bed. So that's now done. And also the lumpy nature of the large scale machine transactions. One quarter we could do 2 or 3 machines, and then the next quarter no machines. So it depends on the percentage of completion that took place during that time period for how much revenue we can recognize. There's still some ebbs and flows in terms of quarter to quarter revenue, but so long as on a fiscal year basis we see improvement, then I think that's where the market will recognize that we're not a threat to go bankrupt. We have consistent growing business, and we've managed our balance sheet appropriately. So 20 was every, the term of the license is when the last patent in the portfolio expires. So as of now, it goes up to 2043. If we file successfully for a patent this year, then it will go out until 2045. Of the machinery itself. So what we know is the machine that was installed in 2013, still working beautifully. So we know it's got a 12-year life. It's mainly stainless steel, and the consumable products are the magnetrons, which create the microwave energy, which have a finite 5,000 hour life to them. But you change them out when you're doing your cleaning very easily, and they're not dear in terms of the actual cost to the operator. We're talking like $60,000 to change out all of them for the large scale machines. Sorry. 0 right now. Please don't change. Our machinery falls under the USMCA, so 0% tariff. And that was our most recent large scale sale, was into the United States. So there's no punishment to the buyer. Yeah. Good question. And this is going to be a muddled answer. It depends on the product they're producing. So some products have higher moisture or low moisture, so you're going to get different levels of throughput, plus the value in market. So a cheese snack is going to sell at $5 a package versus a dry piece of pineapple at $3 a package. And if we're ascribing a 3% royalty on that, we're going to generate more royalties from that cheese snack because it's better throughput and better value in market than we would have. Yes, we remotely monitor all machines. So we know how many hours they're used, how many baskets and trays go through the machinery, and then we audit the royalty payments that come through on a quarterly basis. Is there room for growth in the current installed capacity? Yes, absolutely. Because some companies are running 100% capacity and some are at like 50 or 70% capacity. There's still room for incremental royalty growth based on current installed capacity, based on individual royalty partner execution on their business case. Sorry. Yeah, last question. Just under 2%. I grew up in this business. I joined 15 years ago as a marketing coordinator, busted my ass in the capital markets, and then started to sell these machines and was promoted to CEO in 2018. So I am heavily compensated through the option programming. Our chairman is put his money where his mouth was during those developmental years. He has about 2.5 million shares. So again, just under 2% of insider ownership. Would love to be larger, but it's expensive to live in Vancouver and raise a young family, and have to incrementally buy more and more stock along the way. Sorry, we talk after this, but I'm getting the wink and nod to get out of here because someone else's turn. Yeah, thanks.